Welcome, it's denome. We are witnessing a worldwide game of musical chairs right now, and the chairs are running out. So, as you will soon see, a lot of countries are forced to go back into money printing and are forced to do all these karate moves and flip flops and all these things to prevent a crash or a systemic crash in their own country. And for that reason, they are just pushing off the inevitable crash, and eventually the chest will just not be enough for everyone and someone will have to fall. And the stakes here are that the first country that falls will be remembered as the country that caused the financial crisis of 2022 or 2023. So for that reason, I'm just making this video to show how we are actually accelerating towards this crash and what can be done about it. And also we're going to talk about the United States, the Fed, because they are in a key point, because in this game of musical chairs, it is the US dollars that are running out of the system. So we're seeing a USD liquidity crisis. So the Fed would have to pivot to basically create more United States dollars for everyone to have enough liquidity. But even that would make us go towards a hyperinflationary future. So we're gonna talk about different scenarios that could happen, and I will try to base my thoughts around the facts that we see in the real market right now. So anyway, this is the Bitcoin chart here. I will come back to this later because as you can see, we are at a critical point here. So I would want to talk about this later. But anyway, let's go back to the news here. So here, just today, just a few hours ago actually, we saw this news from the Bank of Japan, which will now conduct emergency bond buying on the 2nd of November, I think. So anyway, the Bank of Japan has now flinched and they are now going back into money printing. They tried to do quantitative tightening, they couldn't, they are now back to money printing. China is delaying the release of third quarter GDP figures indefinitely. This is quite funny in my opinion, because a recession typically is defined as having two consecutive quarters of lower GDP. And if they don't release the GDP figures, there cannot be a recession. So this is another one of those karate flip-flop moves that they are just playing with the terminology here, basically similar to what USA said. They already have a technical recession, but they just refuse to acknowledge it. So apparently they are just they don't have a recession right now. So this is what China is doing here as well. So they are in trouble and indefinitely. So if they just don't release the numbers, cannot be a recession, right? Anyway, they are in a crisis, in a deep crisis, and their banking system is in a crisis as well. UK, of course, the Prime Minister has resigned because she was afraid of not living up to the task. So she quit, put her hands up, she cannot do this. So UK right now is leaderless. That's not a good sign for the markets either. We're, by the way, going to talk about UK in a second now, because they also pivoted back to money printing. Again, I will talk about that soon. Germany is planning an injection of $39 billion into the energy company called Uniper. So their energy system, of course, is in chaos because there's no more gas coming from Russia and the other pipelines are not enough. So Europe is in an energy crisis and they will have to bail out these companies that are also losing money from their previously made deals. So anyway, German government is in big trouble, so they are back into money printing mode, it looks like as well. And also another news from Germany is that their Deutsche Bank is under investigation for a multi-billion euro tax fraud scheme. So that's not a great look, right? So if you had money in Deutsche Bank, would you want to have money in a bank that is being investigated for a multi-billion dollar or tax fraud scheme? So that's not a great look. There are more than 100 investigators. Unfortunately, it doesn't show this. When was this news made? Let me see, 2011. I think this was Tuesday. Fine. Sorry for taking so long. I was trying to find out when this happened. This happened on Tuesday, so it's just like 4 days ago. Anyway, Deutsche Bank is in trouble, which means Germany is in trouble, which means the world is in trouble as well. And back to UK, the Bank of England, this is their website. They are going back to gilt sales. And this is quite interesting here, because if we scroll down, you can see the bank will conduct 8 sale operations with a planned size of £750 per auction. So that's basically almost $1 trillion per auction. Total amount, this is about $5 trillion that they will do just from November 1 until December 8. So in about a month, 5 weeks, they will create $5 trillion. Just like poof, more money. So they are back to complete money printing mode, complete money printers on. That's what's happening in UK right now. Then let's go to Switzerland. Let's talk about the Swiss National Bank. If we go to this website here, this is the SMB US dollar repo auctions since December 27 or 2007. So these are basically swaps, and these swaps, if we take a look at them, you can click this announcement of US dollar auctions to get the most recent PDF. What they show here is they show a US dollar auction or a swap for each Wednesday. So each Wednesday there's an auction here, and normally these auctions, as you can see, each week is $0, almost every single week. There are some anomalies here, but almost every week is $0 for a little over a year now. But right now you can see that a few weeks ago there was a US dollar auction for $3 billion. The next week or 1 week ago it was $6 billion. Now it's $11 billion. So something is going on here, and I want to focus on this one a little bit more so you understand a little bit what's going on here as well, and what kind of message or signal this is giving. So as you can see here also, just 4 weeks ago, there was only one counterparty just buying $20 million. Then there was 9 counterparties, now 15 counterparties, then 17 counterparties. So any bank in the world almost can have an account on Swiss National Bank. And these counterparties here, what they have is basically a direct line for the Federal Reserve of the United States. So Swiss National Bank is just an intermediary between these counterparties and the Fed. And these are actually not swaps, not currency exchanges. These are loans from my understanding, because each of these has an interest rate attached to these US dollar auctions. So it's basically the Fed bailing out the whole international banking sector, because these are not necessarily just Swiss banks. They can be HSBC, they can be a Deutsche Bank, they can be anything. And if we scroll all the way down here, you can see that before the COVID crisis here, if we go over here, you can see this is 8th of March of 2020. That's exactly the next Wednesday after the COVID crash. You can see they had $300 million, and after that they had a lot of these US dollar auctions. But before the COVID crash, it was zero again. So as you can see, every time there's a crisis, these numbers start to go up again. And right now we saw an accelerated rate. We saw 3 billion, then 6 billion, and now $11 billion. So a lot of acceleration compared to the COVID crash. And this, as you can see, it's just zero all the way down here until 2007. So this is when they printed $4 billion, $4 billion, 6, and so on. So this was the great financial recession from 2007, 2008. So whenever there's a crisis, you can see these numbers go up. And when the crisis basically stops, these are zero. So what's going on here? I will try to explain this. This may sound a little bit funny or stupid, but this is from what I understand how this works. So here is the Federal Reserve, and here is the Swiss National Bank, and this is the euro dollar system in its most basic format. So what's going on here is that normally, if you have banks like it here, they can actually create indefinite amount of dollars between each other. So how it works is that this bank here, they create a loan, and then this bank here puts that loan into their checking account. So suddenly, let's say this is $1 billion. Suddenly this bank has $1 billion of cash, which is of course in digital cash, and this bank has $1 billion worth of loans. So this is how the bank just created $1 billion, and then this bank can also do the opposite. So this bank can create a loan, and this bank gets the cash. Okay, my L just went away. Like so. So suddenly $2 billion were created, and both of these banks are still doing exactly what they were doing before, except now each of them have $1 billion dollars more of cash. So a total amount of $2 billion more of cash is now in circulation. But this indefinite money creation stops when the banking system is in a crisis. Because let's say one of these parties is a bank, let's say it's Deutsche Bank. Would you have money in Deutsche Bank if they were investigated for a multi-billion euro tax fraud? Probably not. If you think that Germany is under an energy crisis, that the German economy might collapse because they are not producing as much stuff because they don't have as much energy, maybe you don't want to have German loans on your balance sheet. So maybe you no longer accept money from Deutsche Bank, or you don't accept the loans to the Deutsche Bank. So whenever this happens, the Fed basically has to come in and give these individual banks money. So these are kind of like a hidden repo or hidden money printing, because we don't know who these counterparties are. They are anonymous because they happen in Switzerland, and we have no way of knowing who these counterparties are. But let's say one of them could be Deutsche Bank because they are in a crisis. In each case, these amounts of money, they are nice to have. This helps with the liquidity, but this is probably not going to be enough if there's a banking system. So whenever these numbers go up, it just means that the perceived counterparty risk in the financial system, in the banking system, is going up because banks no longer trust each other as much. And that's also why the interest rates start to go up as well. And of course, there's the Fed rate and all these things that affect the interest rates as well. So right now, there's a dollar crisis basically, and that's why dollars have to be created, and the banking system is just trying to get more dollars into the system. They are using all these, like I said, karate, flip-flops, whatever moves you can think of to generate more liquidity in the system, because banks no longer want to give money to each other. And right now, like I said in the beginning, that we are playing a game of musical chairs. That's because the Federal Reserve hasn't made a pivot back from quantitative tightening into quantitative easing. So in my opinion, that will eventually happen. The Fed will pivot. So one article here, which I thought was quite interesting, is saying that a pivot is coming in December of this year, and that's when they will start lowering the interest rates. Because right now, you also have to understand this theory. If you've been watching this channel, you may already be familiar with this, but it's called the dollar milkshake theory. And that means basically that the US dollar is the reserve currency for the world, and because the rates are going up in USD debt, so these rates are going up that you saw here, as you saw here, because they are going up, it means that taking a loan in US dollars is getting more expensive. So the only way to get more dollars is basically just to get a loan from the USD or to get a loan from another bank. But as you see, it's not easy to get a loan anymore because the banks are not trusting each other, which is just cascading the issue. So the Federal Reserve would have to issue more dollars in excess to basically take out this liquidity crisis, this US dollar milkshake crisis. So as the interest rates go up, even more dollars are required by the banking system internationally. So as long as the Fed is not wanting to put out more dollars to combat inflation in their own country, in the United States, the rest of the world are going into a high inflation mode because they have to pivot. They have to create more money for themselves, so they can sell the British pound for United States dollars to keep able to pay back these loans, as well as to buy commodities and so on. So there's a liquidity crisis for dollars in the market. So this article is basically just saying that it will come in December. I don't know if it will come or it will not come, but I know for a fact that eventually it will come, but I'm not sure if it will come before something breaks, before something crashes, or after something crashes. If it comes after something crashes, that means we will see a nice market crash, almost a market-wide crash. Doesn't really matter in which market you are in. And that's basically also what the Fed would like to see, a market crash, so that then they can come in and inject money into the system, because if the markets crash, that would also take inflation down with it. And the Fed's number one goal is to have stability in the United States dollars, and they don't really care about the markets as much as the United States dollars. So because they want to combat inflation, they would rather see a crash than simply go into hyperinflation mode. So for that reason, I'm thinking that a crash is more likely than avoiding a crash. So the Fed will step in after we see a banking crisis, and they will hope that this banking crisis will be contained in a few banks, and then we're back to normal. But I don't know if it will work or not. In either case, we're dancing in very serious and very dangerous waters. And as an investor, I have no clue what the hell the Fed will do, right? I can only guess what they are doing. So in my investment thesis, I'm still basically hedged both ways. I invested in energy, Bitcoin, and gold. Those are basically my investments at the moment. So Bitcoin might continue to go sideways, it might go up. But right now, if we just take a look at this chart here, you can see that we are at a critical moment here, because we are right below this orange line here and right above the other orange line here. So Bitcoin would have to make a decision. Does it want to continue to go sideways, go up, or actually crash? And the momentum indicator has just broken this trend line, which could signal that we're headed to the downside here as well. So that could happen in the next few days, or maybe not. Maybe it just continues to go sideways like it has done here during this when it crossed this green line as well. So hopefully it would crash so I can buy cheaper, and if it goes down, I would hope that something breaks in the game of musical chairs, some country or some bank goes bust, because the faster we get the crash done, then it's done and we can continue on growth again. But until there's a crash, everybody is just like, will it crash, will it not crash, will it crash, will it not crash? So it's like a painful situation. So if we just get a crash done, it's a done deal, your account will get frozen, you cannot withdraw money, then it's done. Of course, it's a very, very serious situation, and people will die out of poverty and their life savings will be gone. And that's why you would like to take money out of the banking system before all of this happens. And it's a good idea to warn your friends about it, so at least you can tell them, I told you so, when they are out of money. But anyway, maybe nothing will happen. Maybe the Fed will pivot before the crash. That's also an opportunity. That's why I also want to have these assets, not only as a hedge against the banking system failing, but also because if the Fed also goes into the hyperinflation mode, then Bitcoin and risk assets will start going up as well. So all in all, just to combine all of these videos together, you can see that we are currently accelerating into a crash. But will we avoid the crash? Personally, I don't think so. I think the Fed would like to see something break down, and then they will come in because they have to eventually to prevent a system-wide crash. But all in all, there's a lot of risk in the system. The signals are there that even the banking system is under stress. And if you are holding like British pound, that's not really a great idea right now. Even the euro is not a great idea. So dollar is, in my opinion, one of the best assets. I mean, fiat currencies out there, but do you trust the banking system? So your money could go down with the banks as well. So there's that risk as well. That's why gold is great, because you have it physical in your hand, or in your home, or in your locker, or in some vault or somewhere. I think that's everything for this update. What's going on? Let me know what you think about this update. Was this a useful one? Was it too theoretical? Does it make sense? Does it make sense to hedge a little bit for both ways, for the ultimate buying opportunity as well as the inflationary route? Or would you rather just go all in? What would you like to do? What do you think is going to happen? I would like to know your thoughts as well. Anyway, that's it for this video. Hope you liked it. Consider subscribing, and I will see you in the next video.